Welcome to the deep dive. If you're anything like us, you're constantly looking for that edge, right? That deeper understanding, maybe that shortcut to, well, truly being informed, especially with how fast the digital economy moves. And hey, just a quick note before we jump in. If you find value in these deep dives we do, please think about hitting that subscribe button or maybe leaving a comment, sharing this with someone you think would get something out of it. Your engagement, it actually really helps us reach more curious folks and, keep delivering this kind of crypto content. So today we are starting a really fascinating journey. We're looking into a development that seems pretty groundbreaking. It promises to kind of reshape how Bitcoin, the king of crypto, interacts with the very fast-paced world of DeFi. We're talking about a new player here, a new wrapped Bitcoin asset that's making some waves over on Solana. It's strategically named zenBTC. Our mission today, pretty simple. We want to break down what zenBTC is, why it actually matters, how it functions, under the hood.
And maybe most importantly, what this all means for Bitcoin's future utility, its role within that really dynamic Solana ecosystem.
Yeah, and this isn't just, another small update in crypto. This feels like something more foundational. When you zoom out a bit and think about the sheer scale, right? The Bitcoin market, we're talking trillions of dollars now. It's kind of wild how much of that value has just been sitting there pretty passive. For years, Bitcoin's been like, I don't know, digital gold, sure, but maybe more like a digital Mona Lisa. Everyone values it, admires it, but it's often just behind glass, passive holding, not really engaging deeply with DeFi. So this deep dive, we're going to uncover some critical limitations, things often overlooked about Bitcoin's current on-chain use, and how a solution like zenBTC is tackling them head-on. It's a really crucial step, I think, in this whole quest for better capital efficiency in DeFi, especially for the institutional players who really need their assets to work for them. Our goal is to help you understand not just what zenBTC is doing, but really why it's such a big deal. And most critically, what it could mean for you as you navigate this exciting, always changing world of digital assets. So yeah, let's peel back these layers.
All right, okay. So with that context set, let's really get into zenBTC itself. And to do that, we kind of have to start with Zenrock. That's the network bringing this thing to life. Zenrock is described as a decentralized custody network. And that phrase right there, decentralized custody for a wrapped asset. That immediately signals something pretty profound, a big shift in how we think about security, about trustlessness. Something else that kind of jumped out at me about Zenrock is who's backing them. It was incubated by Dan Tapiero's 50T funds that used to be 10T Holdings and One Roundtable Partners. Now, for those of you who maybe don't follow that closely, 50T, that's a pretty significant institutional player in the digital asset world. They're known for having a really deep understanding of both TradFi and crypto. So what does that kind of high-profile backing really signal about Zenrock's long-term goals, especially when we're talking about attracting that very institutional capital we just mentioned?
That's a really excellent point. The 50T funds backing isn't just a thumbs up. It's a huge strategic signal. Dan Tapiero and his team, they bring decades of experience from traditional finance. They deeply understand what institutional investors need. Think risk management, compliance, long-term value, all that stuff. So them incubating Zenrock, it tells you this probably isn't just some speculative hype project. It suggests a well-funded, really carefully planned effort designed to meet those institutional grade standards right from the start. It suggests a vision that goes way beyond just retail DeFi, right? It's aiming to bridge that gap between these huge pools of traditional money and the decentralized economy. That kind of backing gives them the resources, the network, the credibility needed to handle, complex regulations and build the really robust infrastructure you need for large-scale adoption. It definitely elevates Zenrock, signals they're serious and in it for the long haul. And the core of their tech, the thing underpinning all this, is what they call the Decentralized Custody Token Standard, the DCT standard. This standard is specifically built to allow secure, decentralized self-custody for wrapped assets and zenBTC. It's the very first application of this standard. So it's not just a one-off product. It's like the debut for a whole new foundational framework, one that could potentially support, all sorts of tokenized assets down the line.
That really does set a compelling stage. Okay, so what's fascinating then is how zenBTC is positioned within this whole thing. The sources are super clear. It's the first wrapped Bitcoin on Solana that's both decentralized and natively yield-bearing. Let's break that down a bit, because those two things, decentralized and natively yield-bearing, they're absolutely crucial differentiators. They really make zenBTC stand out.
Absolutely. So when we say decentralized for a wrapped asset like this, it's not just, a buzzword. It means the actual Bitcoin, the BTC that backs zenBTC, isn't held by one single company or a small group of known custodians. No single point of failure. Instead, Zenrock uses this robust distributed network. It leverages advanced multi-party computation, MPC cryptography. And this is a game changer, really. It means no single validator, not even a small group, holds the complete private key for the underlying Bitcoin. Instead, you have these cryptographic shares spread across a network of independent nodes. And you need a supermajority, like a large percentage of these nodes, to collectively agree to move or redeem any Bitcoin. This drastically cuts down on single points of failure. It reduces counterparty risk, makes it highly resistant to censorship, things that are frankly non-negotiable for serious institutional money. They want those same security assurances they get from, say, their traditional prime brokers, but they want it in a truly trustless, decentralized way. Okay, then natively yield-bearing. This is where it gets really interesting and honestly pretty innovative. This isn't about taking your wrapped Bitcoin and lending it out somewhere else to earn yield. I mean, zenBTC can facilitate that too, sure, but that's like a secondary thing. Native means the asset itself, just by holding zenBTC, inherently generates yield. And it comes directly from the underlying custody network's operations, specifically, from fees collected by Zenrock. This mechanism is baked right into the asset's core. It ensures a direct, sustainable, and, importantly, scalable source of yield that's tied to the network's own activity. Think about that huge $2 trillion Bitcoin market. It's widely known that it's, well, profoundly underserved by traditional custodians who mostly just offer passive holding. No yield. zenBTC is designed to solve exactly that. It lets users self-custody their Bitcoin in a truly decentralized way, keeping Bitcoin's native security, while also unlocking a secure baseline yield plus more yield opportunities across the Solana ecosystem. This is a really big shift from Bitcoin just being this static store of value. It truly transforms it into an active, yield-generating part of the on-chain economy.
That distinction isn't just key. Like you said, it feels like a tectonic shift in how we view Bitcoin's role. For years, Bitcoin was, like a digital Mona Lisa, valued, admired, but static, locked away. What zenBTC seems to be doing is bringing that masterpiece into the active workshop of DeFi, turning it from just a store of value into a genuinely productive asset. The real insight here is how it taps into that institutional demand for yield, a demand that, up till now, couldn't really interact securely and permissionlessly with Bitcoin's core value proposition. And this connects perfectly to the broader trends we're seeing everywhere, right? There's been this rapid acceleration in tokenized assets way beyond just crypto natives. We're talking tokenized stocks, tokenized credit, even tokenized real estate, art, commodities, you name it. There's this clear growing push from both institutions and, frankly, sophisticated retail folks that want to maximize tradability and, crucially, the capital efficiency of these massive total addressable market TAM assets. Assets like Bitcoin with just colossal potential demand, they want to bring them onto on-chain rails.
The problem, like you mentioned, is that Bitcoin, despite being digital gold, has largely just sat there when it comes to on-chain utility and yield. Valuable, yes, but not really working for its holders within DeFi, at least not in a yield-generating way at its base. So zenBTC aims to change that. It provides this direct on-ramp for Bitcoin to become productive, not just passive, within DeFi, without sacrificing decentralization or those core security principles that make Bitcoin, well, Bitcoin. It's about bringing digital gold into the digital economy as an active player, generating returns, not just sitting in a digital vault.
And if we connect that to the bigger picture of why Solana has kind of emerged as the go-to hub for Bitcoin DeFi, it becomes really clear why Zenrock chose this path. The performance of the underlying blockchain isn't just a nice feature, it's absolutely critical. It directly dictates the speed and scale of on-chain activity. We've seen this play out really vividly with Solana's remarkable rise. Despite maybe some past narratives or challenges, Solana has quickly become a leading spot for Bitcoin trading activity, which is honestly a significant and maybe surprising fact for a lot of people. Consider this data point. A recent report, I think it was Syndica, from June 2025, it showed Solana accounts for something like 59% of wallets actively trading BTC. 59%. Now, here's the kicker that really underscores Solana's capital efficiency. This is despite Solana holding less than 25% of the total wrapped BTC market at the time. Just think about that. Other chains might hold more wrapped Bitcoin in total volume, but Solana is where the active trading and usage is happening.
This data, it just unequivocally shows how Solana's incredible capital efficiency, the super low transaction costs, the near instant finality, the massive throughput is pulling in large-scale on-chain activity for Bitcoin. It shows users and institutions are prioritizing the ability to move fast and cheap over just parking large static amounts of wrapped Bitcoin on slower, more expensive chains. It's a clear market signal. The underlying infrastructure matters a lot, especially for liquidity and active use. The market's voting with its feet, basically.
That syndicate data point is really striking, especially that compares the high trading activity, lower overall wrap BTC volume. That really speaks volumes.
But, for some listeners, the whole idea of Bitcoin's utility shifting onto a network like Solana might still raise some eyebrows, given, past network stability issues or even just perceptions about its decentralization compared to, say, Ethereum. How does Zenrock kind of address those underlying chain-level concerns? How do they make sure users feel secure putting Bitcoin, the ultimate digital gold, onto a network known for speed, but maybe less known, at least in some circles, for that battle-tested security vibe?
That's a very fair question and an important one. Zenrock tackles this on a few different fronts. First, it's really crucial to separate the security of the Zenrock custody network itself from the performance of the Solana blockchain. Zenrock's MPC-based decentralized custody model for zenBTC. It's designed to be chain agnostic at its core, meaning its security doesn't solely depend on Solana's consensus mechanism. It provides its own robust layer of cryptographic security for the underlying Bitcoin, and that's paramount for institutional comfort, regardless of the settlement layer. Second, yes, Solana has had its challenges historically, but its progress in scalability, throughput, and increasingly its decentralization through things like multiple independent validator clients, distributed stake, that progress has been really significant. Zenrock's choice to build on Solana isn't necessarily an endorsement of every single moment in Solana's past. It's more of a pragmatic recognition of its current, frankly unmatched efficiency for high-frequency, low-cost on-chain stuff. For institutions looking to deploy serious capital and actively manage positions, Solana's technical capabilities just offer advantages for certain use cases right now. So Zenrock strategically uses Solana as the execution layer, its ability to process millions of transactions cheaply and quickly, but it maintains that high standard of custodial security through its own network and MPC technology. It's really about combining the best of both worlds. Bitcoin's proven track record as that institutional store of value, secured by Zenrock's advanced decentralized custody, paired with Solana's world-class efficiency for actually doing things on chain. This synergy aims to unlock Bitcoin's potential, letting it be truly dynamic and productive in a permissionless, efficient environment. It's a forward-looking bet based on current performance and future scale, even considering past perceptions.
That makes a lot of sense. It's a clear explanation of that strategic alignment. And yeah, they are very clearly aligned with Solana's mission, expanding permissionless Bitcoin infrastructure. They acknowledge Bitcoin not just as an asset, but as the world's premium collateral asset. It gets called digital gold constantly for a reason, right? Its track record, its immutability. So what Zenrock is carefully trying to do is pair this top-tier collateral Bitcoin with what they accurately call the world's most efficient blockchain, Solana. Think about the potential synergy there. You're taking an asset known for ultimate security and value stability, and you're bringing it onto a blockchain known for incredible speed, super low cost, massive scalability. This combination of high-quality, natively yield-bearing Bitcoin on a high-performance, cost-effective blockchain, well, it could create an incredibly powerful dynamic for the whole DeFi ecosystem, like building a superhighway for Bitcoin's utility.
Okay, so moving into how zenBTC actually generates and maximizes yield, let's first dig a bit deeper into that native yield generation. It's really one of the most innovative parts. As we mentioned, one key mechanism is that it generates yield directly from fees on its underlying custody network. But what does native yield really mean here? It doesn't rely on you lending it out somewhere to earn interest. That's, like we said, a separate secondary thing you can do. Instead, the yield comes straight from the basic operations of the Zenrock network itself. Think of it like this. The network provides decentralized custody services. When users deposit Bitcoin to get zenBTC or redeem zenBTC back for Bitcoin or do other things needing the network's crypto custody, small, transparent fees are generated. These fees get collected by the network and then distributed proportionally back to the zenBTC holders. It's an internal algorithmic revenue stream, not based on external lending rates or market speculation, and this model makes the yield inherently sustainable. It's designed to scale directly with the growth and activity of the Zenrock network, which implies this powerful virtuous cycle, right? More users adopt zenBTC, more institutions bring their Bitcoin onto Zenrock, the network processes more transactions. All that strengthens the fee generation. That directly means a bigger fee pool, which leads to more robust, potentially higher yield for zenBTC holders. So more adoption equals more yield potential, which makes the asset more attractive, driving more adoption. You see the cycle. This is fundamentally different from wrapped assets that are just passive tokens relying entirely on external, often volatile DeFi protocols for any yield. zenBTC offers that baseline, consistent yield just from holding it, a more predictable, fundamental return.
Okay, and here's where it gets really interesting. Because zenBTC doesn't just stop with that native yield from the custody network, it goes further. It enables direct, multifaceted DeFi use within Solana's incredibly active on-chain economy. So you've got this baseline yield from Zenrock, And then you can take your zenBTC and actually put it to work across Solana's whole thriving DeFi scene. And Zenrock has already announced a key partner to kick this off, Kamino Finance. Kamino is, well, pretty well known as Solana's biggest credit market. They'll be the starting point for this DeFi integration, but probably not the end point. This partnership immediately opens up a whole new range of possibilities for zenBTC holders, engaging in sophisticated strategies, lending, borrowing, providing liquidity, all built on top of that native yield. And this is just my take. Aditya Dave, he's a co-founder of Zenrock, he put it really powerfully. He said, and I'm quoting here,
Bitcoin is premium collateral, but the actual utilization of Bitcoin in the on-chain economy has been remarkably low. That's going to change. zenBTC provides secure access to native Bitcoin yield opportunities that have been inaccessible to institutional investors until now. That quote really drives home the significance, doesn't it? It points to a fundamental paradigm shift, especially for institutional investors. For so long, these huge pools of institutional Bitcoin have been, like that Mona Lisa just sitting there idly. Now, with zenBTC, they finally seem to have a secure, decentralized, and efficient way to put those massive Bitcoin holdings to work, generating additional returns, not just letting it sit in cold storage. It really transforms Bitcoin from just a vault asset into a truly productive one within the digital economy, unlocking a whole new frontier of capital efficiency for the big players.
And that transformation, it has massive implications for institutional adoption. When you look at the current situation, the amount of Bitcoin deployed on Solana, despite all that trading activity we talked about, is still incredibly low in terms of total volume. The sources say there's only about 6,945 Bitcoin currently on Solana. Now, that sounds like a lot to maybe you or me, but in the context of a $2 trillion global asset, it's a tiny, tiny fraction. This just highlights this immense untapped opportunity. zenBTC represents a really significant chance to scale up institutional Bitcoin adoption on a high-performance chain like Solana, to move the needle from thousands to potentially hundreds of thousands, maybe even millions of Bitcoin. Institutions, naturally, they demand not just yield, but also top-notch security, efficiency, reliable operational frameworks, all that stuff. zenBTC's technical foundations seem meticulously built to meet these specific needs. That distributed multi-party computation, the MPC tech, absolutely crucial here. It doesn't just offer theoretical security, it helps maintain Bitcoin's strict security properties by cryptographically distributing the keys. That's critical for institutional comfort, for compliance. This lets them leverage Solana's well-known advantages: speed, low latency, cost efficiency, without compromising on those non-negotiable security requirements for managing large amounts of capital. For institutional players, this combination is incredibly compelling. They get the robust, auditable security they need, the operational efficiency to manage it effectively, and this newly accessible ability to generate yield directly from their digital gold, something largely inaccessible in a secure, decentralized, and capital-efficient way until now. It really removes a lot of the traditional hurdles that have kept large-scale institutional money out of on-chain Bitcoin, paving the way for potentially a big wave of new liquidity and activity.
Okay, now let's get into the mechanics, partnership and liquidity. Because, let's be real, none of this works without strong alliances and a really well-thought-out liquidity plan. We just touched on it, but let's really dive into that Kamino Finance partnership in more detail. Zenrock has explicitly partnered with Kamino. The goal seems to be to cement zenBTC as the go-to Bitcoin management solution on Solana. This isn't just like a casual integration or simple listing. It sounds like a deeply integrated strategic alliance designed to speed up adoption and provide real utility. So through Kamino, users will get access to specific offerings, tailored to make zenBTC not just available, but highly functional, profitable for a whole range of users. First up, they're launching zenBTC Kamino Liquidity Vaults. These vaults are designed for automated yield strategies and capital efficiency tools. What's particularly smart about this, I think, is the dual focus. They're tailored for both power users, sophisticated DeFi traders, quant funds, institutional desks needing advanced strategies, and for passive investors.
People who just want to deposit their zenBTC, set it, forget it, and earn yield without constantly managing it. This dual approach is key. It broadens the appeal of zenBTC significantly, makes sure a wide spectrum of people, from crypto natives to maybe TradFi entities dipping their toes in, can easily benefit. Second, zenBTC is verified on Kamino Swap. Now, this might sound like a small technical thing, but it's actually crucial for user confidence and having a smooth experience. It means users can expect good pricing when swapping zenBTC, and really importantly, protection against those annoying token swap errors that can cause real losses in DeFi. These details, they show a really thoughtful approach to user experience, security, integration, all vital for getting widespread adoption and building long-term trust.
Yeah, absolutely. And to make any DeFi asset fly, especially one aiming for institutions, bootstrapping deep liquidity, that's like Step 0, it's essential. You can have the coolest product ever, but if there's no liquidity, it's hard to trade, hard to use as collateral. It just won't get traction. It won't reach its potential. Zenrock seems to have a very clear, robust plan here. They're rolling out a pretty substantial incentive program, specifically 2.8 million OROCK tokens distributed over a focused 13-week period. And it's important to understand what OROCK is. It's not just, another random governance token. It's the native token that actually secures Zenrock's decentralized custody network. So these incentives, they aren't just arbitrary giveaways. They're designed carefully to align the interests of the early liquidity providers with the long-term security, stability, and growth of the whole Zenrock network. The program is explicitly called a targeted incentive program designed to reward sustained participation. That phrasing is really telling. It strongly suggests a focus on cultivating long-term committed LPs. People invested in the ecosystem's success, not just attracting that short-term, opportunistic mercenary capital that jumps in, pumps, dumps, and potentially destabilizes everything. The goal seems to be building a stable, robust, committed liquidity base right from the start, which is absolutely critical if you're aiming for institutional-grade reliability.
Okay, so what does this actually mean for someone looking to get involved? Or even just someone curious about how this deep, stable liquidity gets built and sustained in practice. The Kamino liquidity vaults are using what they call a progressive scaling model, and it's spread across 3 very strategic trading pairs. This approach seems incredibly smart. It diversifies liquidity sources and taps into different but equally crucial market segments. The first pair is zenBTC CBBTC. This one strategically leverages Coinbase's institutional Bitcoin, CBBTC. The significance here is huge. It directly connects zenBTC to a major trusted institutional player like Coinbase. It basically onboards their vast institutional Bitcoin liquidity straight into the Solana ecosystem via zenBTC. That's a critical bridge. It could facilitate a really seamless flow of institutional capital from CeFi into Solana DeFi. It shows they really understand how to bring in big traditional money pools by meeting them where they are. The second pair, zenBTC USTG. This provides that essential fiat liquidity. For broad access, for mass adoption, you absolutely need stable, efficient ways to get in and out using fiat currency.
USDG, being a decentralized stablecoin representing US dollar value, ensures users can onboard and offboard from zenBTC easily. Makes it much more approachable for a wider range of people, maybe those less comfortable with direct crypto-to-crypto trades. It cuts down friction, maximizes ease of use key for driving real volume. And the third pair, zenBTC GDOSOL, this one is brilliant, I think. It captures Solana's liquid staking yield. GDOSOL represents staked SOL that you can still use in DeFi, right? It's basically a yield-bearing version of Solana's native token. By pairing zenBTC with GDOSOL, Zenrock deeply integrates zenBTC into Solana's native DeFi ecosystem. It lets it leverage existing high-performing assets and yield opportunities already booming within Solana. It creates this smooth flow of value between Bitcoin and Solana's dynamic liquid staking scene, boosting capital efficiency even more. Now, regarding that ROCK token distribution schedule, it's meticulously designed with that long-term view. Weekly distributions start at 200,000 tokens during the foundation phase, establishing that initial liquidity. Then they progressively scale up to 400,000 tokens during the sustained expansion phase.
This gradual increase isn't random, it's strategic. Again, explicitly aimed at rewarding long-term liquidity providers while actively filtering out mercenary capital, amen. By incentivizing commitment over quick flips, Zenrock is deliberately trying to grow a healthy, robust, committed liquidity pool that supports the long-term vision for zenBTC on Solana. It's about building a strong foundation, not just a temporary splash. So just to quickly recap this really insightful deep dive we've explored zenBTC, a genuinely groundbreaking development bringing decentralized, natively yield-bearing Bitcoin to the Solana ecosystem. It directly tackles that long-standing issue of untapped Bitcoin utility, transforming digital gold from mostly a static store of value into a dynamic, productive asset within DeFi. The strategic partnership with Kamino Finance, coupled with Solana's inherent efficiency and Zenrock's innovative custody tech, it really sets a powerful, compelling stage for zenBTC to potentially become a cornerstone of Bitcoin DeFi. This isn't just about wrapping Bitcoin. It feels like it's about fundamentally changing its role and potential in the whole on-chain economy.
Yeah, exactly. And this whole thing raises a really important question, I think, for you, our listener, to think about. Given zenBTC's approach, combining Bitcoin's undeniable collateral strength with Solana's efficiency and these new DeFi yield opportunities, how might this innovation fundamentally reshape how we all understand digital gold? Will Bitcoin really transform from what's mostly been a static store of value into a truly dynamic yield-generating asset within the broader financial ecosystem? Could it fundamentally alter its investment case for a whole new wave of participants? And maybe looking further out, if this model secure, decentralized, natively yield-bearing wrapped assets, if it proves successful, if it scales like Zenrock hopes, what other huge pools of traditional assets currently sitting passively or stuck in old systems might follow this path? Moving on to decentralized rails, becoming similarly dynamic, yield-bearing formats in the future, definitely leaves us with this profound sense of, well, immense potential and just the continuing rapid evolution of this entire digital asset space. Lots to watch.